We've all been hit by rising interest rates and inflation in the UK. However, the problem isn't just UK specific, and it's affecting people all around the world. Every day inflation is making things in our day-to-day life more expensive than ever before. From fuel and groceries to rent and mortgages, inflation has caused everything to get more expensive. So, as an investor, how are you best prepared to deal with this shift in the market? Historically, it's been touted that investing in things like gold has been an excellent hedge against inflation. But I believe that to be incorrect, and I'm not the only one. When asked how he felt about investing in gold, legendary investor Warren Buffett stated that a productive asset would outperform a non-productive asset over any extended period of time. The idea being that if you buy an ounce of physical gold today and held it for a long period of time, let's say 100 years, every day you could look at your gold, you could hold it, you can even shine it really nice if you wanted to, but at the end of those 100 years, all that you would be left with is that ounce of gold, making it pretty much a non-productive asset. Alternatively, if you invested into stocks or property during that same period, your asset would have a purpose and have more to offer you, such as rental income, dividends. That would make it a productive asset. Those who are heavily invested in gold can get very defensive when you say that it's a poor investment. That's mainly down to the fact that they want everyone to agree to their motivations for ownership. They're a very doom and gloom bunch of perma-bears. They want everyone to be scared and to be hiding in caves hoarding their gold, as society pretty much collapses around them. The main premise in investing in gold comes from the fear that paper money loses value as time goes on. It's a very valid point. However, the investment vehicle of gold isn't the solution to the issue. Say, for example, you've been working hard at your job and you've managed to save £1,000 that you're now looking to invest into your future. You really only have a few choices to make. You can invest in stocks, property, business, or physical assets like gold. If you invest that £1,000 into gold, the only way you can make money is if the price of gold increases. Since gold is a non-productive asset and it doesn't actually produce anything, the only way gold can increase in value is if demand rises more than supply. Now, £1,000 won't be enough to get you started investing in property, but if you did have enough capital to invest in a small house or apartment, you could then rent it out and get a check every single month from your tenants. In the long term, you benefit not only by receiving a monthly income, but also the increase in value of the asset as well. Most investments are built on the supply and demand relationship. Similar to gold, the value of a stock is based on the number of people buying in. If lots of people are investing in a stock, you can expect it to rise. However, over the long term, the value of the stock is closely linked to the profit produced by the underlying business. When investing in the medium to long term, it makes very little sense to invest in gold, as in some ways you're essentially putting your money to sleep as opposed to making it work for you. So there you have it. Hope you guys enjoyed the video and learned something new. If you haven't already, make sure you like the video and subscribe to the channel.